It's been an interesting quarter that's somewhat a continuation of how we started the year. Here in the US, we've seen strong job growth, but persistent inflation, which has led to a hawkish Fed. Um, Rate cut expectations have been reduced, which have muted market returns on an international scale. We've seen pretty narrow market participation, NVIDIA being the star of the quarter, the Mag 6 following NVIDIA, and then kind of everything else. Portfolio companies, however, within our strategies have shown really very strong resilience in their operating performance. Yeah, we see the global growth portfolio as very attractive at the moment. Our portfolio PE multiple is about 24 times next 12 months earnings and about 22 times 2025 earnings. These figures are at about 10-year lows. For the quarter, from a sector perspective, our underweight energy, real estate, and consumer staples had contributed. Our allocation to communication services, industrials, and healthcare detracted in the quarter. Prices really remain pretty consistent in the portfolio, being overweight the classic growth sectors, being underweight the typical value or non-growth sectors. So our I would say from a high level, the sector exposures haven't changed too much. However, when we look beyond AI and obesity drug companies within the portfolio, we're excited about our businesses we own that are tied to things like electrification, defense spending, infrastructure spending broadly, as well as reshoring. So we're touching on some of those themes that I talked about in the prior question. We've added Saab to the portfolio. It's a European defense business in the defense spending bucket of the things we're trying to get exposure to. We're seeing an increased budgets towards defense globally. Sweden is included now in NATO, which will increase its own country's defense spending. And we're extremely impressed with the management team. Kind of changing gears from the luxury perspective, which is typically how we tend to have exposure to the consumer. We added Puig, which is a Spanish business. It's family owned and operated. They acquire and build businesses versus licensing them, so it makes it a little bit unique, and it has a culture of ownership, being a family run business. On the electrification side of things, we own GE Vernova. This was recently spun out of GE Aerospace. It's really giving us an exposure to wind, the electric grid, and other renewables. And of course, this business comes with GE's culture of efficiency and being very result oriented. And then to continue our exposure to semiconductors and artificial intelligence, we swapped out of one holding to buy Taiwan Semiconductor, or I should probably say rebuy, because we've been absent. We've been out of the company for a couple of years now, maybe a year and a half. But it's our favorite picks and shovels way to play the growth in AI, the increase in demand in leading edge chips that are going to be absolutely essential in everything from the next cell phone to 5G networks, high performance computing, and anything else you could imagine within AI. So those are just a few that were added in the quarter.